I'm just going to tell you some facts that you know to be true, verifiable facts that have to do with the American economy. And people accuse me of being a wet blanket. People accuse me of sowing fear and uncertainty and doubt, FUD. And the thing is, I'm just telling you what I'm seeing. So what I like to do in this video is I'll show you actual verifiable facts and you can come up with your own conclusions. But maybe this is a time where it would be appropriate to have some fear, uncertainty, and doubt. So what do we know? We know that right now, 57% of American households wouldn't be able to cover a $1,000 sudden expense if it cropped up. We know that 70% of American households are feeling financially stressed, and 40% have what could be considered serious financial problems. We know that inflation is at 3%, which is good. It came down from 9% 2 years ago, which is the highest it was since 1980. However, even as they're decreasing interest rates in response to taking the victory lap because inflation's coming down, there's a chance that we're hitting a big inflationary bounce I've been telling you guys about for a very long time. And even as interest rates come down, you could still see inflation going higher. The actual speed of the decline of inflation is actually slowing. It went from 9% to 3% really quickly. It's going to take a long time to try and get to 2.5%. I don't think it'll even ever get there. And you guys might like that we're ad-free and sponsorship-free. You can help keep us that way by joining the Peter Leeds Army, link below. We know that a lot of people are working 2 jobs just to pay the bills. A lot of people having to have a side hustle even when they don't want one. From Fortune magazine, nearly 10% of workers reported having a main job plus at least one other side gig, according to Stanford University's Nicholas Bloom, which means that it's actually double the 5% rate that the Labor Department has been touting. One of the best indicators of economic health or weakness is the level of homeless people. Now, the homeless population, there's a lot of reasons why someone can become homeless, but what's happening is the aspect of that when the economy gets weaker, there's a lot of people who are not mentally ill, they're not drug addicts, that are going to be on the streets because the economy is falling apart. More than 650,000 people experienced homelessness on a single night in January, a 12% jump from 2022, according to the U.S. Department of Housing and Urban Development. That's the highest number since the country began using the yearly point-in-time survey in 2007 to count the homeless population. You know that we have a massive trade deficit. We're buying a lot more from other countries than they're buying from us. In terms of services, commodities, products. The United States recently reported a trade deficit of $64 billion. According to Investopedia, national federal debt hit $34 trillion, and we crossed that threshold just in December. And this national debt is only going to grow as the various wars all around the world expand. In South America, in Africa, not just Middle East, not just Ukraine, not just the South China Sea, not just even what's going on with North Korea and South Korea right now. They're shooting at each other. But the point is, we're just taking on more and more debt to have the lifestyle that we want to have. We're living off our credit card, and people are saying the economy is strong. If somebody takes their credit card and goes and spends a whole bunch of money, they're not financially stronger or healthier. They're just taking on more debt that they have to deal with later. And speaking of which, I'll show you a chart from the St. Louis Fed. This is just a chart of monetary liquidation, monetary creation, but I call it liquidation. They're making the value of everyone's dollars less valuable by creating more and more money. Of course, the war in the Middle East is going to expand. The war in Ukraine is not going as well as it has been for the Ukrainians. There's a lot of military chaos going on right now. Even in Africa, there's a big war. There may be an oil war in South America as Venezuela invades Guyana. And without the 2-month blip after the whole virus epidemic chaos, we haven't had a recession since 2009. Since 2007 to 2009, that was a recession. And since then, we have had the longest period of economic expansion in American history. The longer the expansion, usually the longer the decline, or when it recesses, it'll be more significant. And of course, because of recency bias, when an economy has been expanding for so long, people forget or don't put in the front of their mind the other aspect of the way things can go. When a lung breathes in, it breathes out. It breathes in, breathes out. It always happens. There's always going to be recession. Is the next one right around the corner? Almost certainly, in my opinion. But I'm not giving you opinions. I'm giving you stats that you can verify for yourself. Let's keep going. There's been an inversion of the yield curve present before every recession in the last 50 years. Is the yield curve inverted right now? Yes, absolutely. It's been inverted for a while, all up and down the yield curve, meaning that a shorter term bond will pay more coupon payments than a longer term bond. So you buy a 2-year bond and you'll make more off of that than if you bought a 30-year bond. The yield for a 10-year U.S. government bond was 4.71%, while the yield for a 2-year bond was 5.09%. The 2-year bond paid more than the shorter term bond. I always tell you that unemployment will rise once the recession starts. That's very verifiable. And I always tell you that low unemployment is like a tax on small business. And small business is the backbone of the American economy. It doesn't get as much media coverage or hype or fame as something like Oracle or Microsoft or Google. But small business is what keeps the American economy going. And it's a consumer-driven economy. We know that we're losing a bit of our petrodollar status. This is from oilprice.com. A fifth of global oil trade used non-dollar currencies in 2023. The amount of nations using the US dollar for oil was a lot higher than that, and now about a fifth of it does not, and that number will increase a few years down the road. Maybe it'll be half, maybe 30%, but it will always continually be a growing trend where there will be less and less US dollars being used in transactions for oil. And going away from the petrodollar and focusing on the world reserve currency, which is the US dollar, we know that the BRICS nations are gearing up for their own currency. They're expanding, they're adding new members.
In addition to China, existing BRICS members include Brazil, Russia, India, and South Africa. On January 1st, 5 new members have joined. Oil-rich countries like Saudi Arabia, the United Arab Emirates, and Iran, along with Egypt and Ethiopia.
We know that investor complacency is extremely high. And usually when it gets really high like this, it's followed by a pretty significant stock market decline because nobody's paying attention to all the risks that are everywhere right now. You can look at the fear index or the VIX, the volatility gauge. You can see how much activity there's for put options, meaning bets against stocks, bets against the economy. The more that heats up, the higher the VIX goes. Right now it's at 13.35, but the 52-week high is nearly triple that at 30.81. And on only 2 occasions, the VIX has spiked towards 60, one during the global financial crisis and once during the virus that was running around the world. And we know we have to pay down our debts, don't we? There's counterparties. The money's owed to somebody. They're going to want that money back. So either we pay them, so that means we have to come up with the money, which we don't have, or we default, or potentially what they're doing now is liquefying the dollar, actually liquefying the dollar, making it so unvaluable that it's easier to pay down the debts. But that means that we're going towards significant inflation, significant monetary creation, banana republic style government, but more likely, and you're seeing it now, there'll be more bankruptcies, corporate defaults. The country, corporations, organizations, municipalities, individuals all have the same situation. People think about them differently, but the government owes money and has to pay the money. You owe money, you got to pay the money. The choices are the same too. Defaults. The one thing is you can't create more money yourself, but the government can. And they've made sure to use that power, especially over the last couple of years. But this is from a publication called Investment Executive. U.S. corporate defaults are on the rise, and that's also the data is according to Fitch. Amid growing financial strains, default volume has almost doubled. Total bankruptcy filings rose 13%, and business bankruptcies rose nearly 30% in the 12-month period ending September 30th, 2023. And there's literally dozens and dozens more of examples I could give you. I'm not going to make a 4-hour video here. The point is, there's plenty of things when you look at them that are really negative. So I'm telling you about them so that you can decide for yourself what you're going to do about it. And there are things that I would suggest that you do. Of course, none of which is any personalized trading advice. I know that you know that. And the big knock on me is that people say, you've been saying that for years. And I have. I've been watching the economy breaking down for years. And people think I'm a negative guy. I'm a penny stock guy. That's the absolute pinnacle of optimism. You're trying to make tens of thousands of dollars from hundreds of dollars. You have to be an optimistic guy to get into that world. But as I've been seeing for many years, and I'm going to keep telling you about it, and 5 years from now I'll be talking about this as well, but who knows what kind of world we're going to be in that point. In terms of the FUD accusations, the fear, uncertainty, doubt, this is the most likely time in your entire life, in my opinion, that you should be giving some credence to the idea of fear, uncertainty, and doubt. You should be afraid. You should be uncertain. One of the things I'm doing is I'm making sure to own some actual assets, such as gold, silver. If you can't afford gold, you buy silver. Physical, 4/9 pure, 99.99% pure silver or gold. I suggest you avoid a lot of the things that could be at risk, such as high-flying stocks. I would suggest that you always prepare for the worst and expect the best. If there's a recession, does that mean you lose your job? Somebody that is responsible or you're responsible for, they lose their job, you got to help them. Is that a possibility? But I've been thinking about this a lot lately, and there's not much any of us can do unless you're a congressman or a congresswoman or a president or whatever. There's not a lot of things that any of us can do. Most people, the vast majority, are just going to get up in the morning, turn on the news, and they're going to see, okay, so the debt's bigger. Okay, so we're at war with them. Okay, like you just go along with it. So then in that situation, what do? You got to do what's best for you. So I have in my script here, I wrote, save yourself. Learn what you got to learn to try and deal with what we're all going to be dealing with. This is going to be a bad situation or bad period coming up, in my opinion. And I know I said that I'm not giving opinions or anything like that, so just ignore that. But if you guys like that we're sponsorship free, so you don't have to listen to these big ads all the time, that we're ad free, that we're independent, and you want to keep us that way, please help show your support by joining the Peter Leeds Army.